Good morning, everyone. Good morning from Los Angeles. Welcome to Power Hour every Friday, 10 a.m. Pacific, 1 p.m. Eastern. Jay Powell on his exit saved your asses. Don't forget, because the market was actually looking nervous. But he threw the last gift at you all before he leaves next June. And Trump probably told him, if you don't say anything positive or sound dovish, I'm going to get you arrested or something. But all kidding aside, that candle, after the news reading algos read his speech within 8 seconds or less and reacted, obviously, put a huge candle and, took us close to all-time highs. Not on triple Q SPX, but we're kind of giving up a little bit of the gains, but we'll see how we close. It's Friday. Weekly option expiration, obviously. So I use this rally to close out pretty much everything, either take some losses, take some gains, but I didn't go flat, but pretty close. Down to 3 positions. We'll share those in a minute. So what did he say? He said there is a possibility of rate cuts starting in September. I've done a lot of content about this. The Federal Reserve cuts rates for certain reasons, or raises rates for certain reasons. It's a given. This has been the history of the Federal Reserve. Federal Reserve I look at as the gas, right? The gas pedal or the brake pedal of the economy. That's the way I look at the Federal Reserve. Federal Reserve can only influence the short-term rates on the short end of the curve. Long end, they cannot do much about because that market is so huge. Proof is in the pudding. They cut the short-term rates by 100 basis points. Long-term rates in the 10-year, 20-year, 30-year bond is up 100 basis points since they did that. However, Fed cutting the rates, two reasons. Well, one, obviously, they're looking at economic activity. If the economy is slowing, as a preemptive suggestion, they start cutting rates. Now, the market did not read any of that into it, okay? Not yet anyway, but there is actually, did I put that up? No, I didn't. On Monday during trading with Sergio, I'll show you guys that graph. During interest rate cut cycles, actually, the market goes lower for the fact that the economy is slowing down. Now, I don't think, the Powell caved under pressure. If you look at all the data, and you guys can all go check this. If you're interested in macro, go to FRED, F-R-E-D, Federal Reserve Economic Data. There is a website. You can get infinite amount of macro data, from credit card defaults to delinquencies to mortgage delinquencies to unemployment. You can get everything, okay? So when I look at the macro picture, Fed cutting rates in our history has happened a couple of times that most of you remember. I remember the dot-com bubble, but that was a different story. But economic macro picture changes before the Fed starts cutting rates. And so it happened in 2008, okay? What happened is that market topped. We got a housing crisis, right? The financial crisis, and Fed aggressively started cutting rates. While they were cutting rates, the market was selling off heavily, right? Close to 40-50%. But what it does, at some point, there's a lag between Fed cutting rates and those rate cuts, being reflected into the economy in general, the general economy. So Fed cutting rates while all asset classes are close to or at all-time highs doesn't make sense. So are they seeing a slowdown in the economy? Or is this just keep the music on? We can't stop the music. The musical chairs need to go on. And was that it? I don't know. But obviously everything reacted very positively. for now anyway. Let's see if we go make all-time highs. We probably will. So we'll see. We'll see how we close today. And the second part of it is Fed raises rates, right? When did they raise rates? Well, when the pandemic happened, we had a massive interest rate cutting cycle because the economy was about to just die. Everybody's at home. GDP collapse during the pandemic. They cut the rates. They kept something called ZIRP, zero interest rate policy, for way longer than they should have, right? And who showed up? Inflation showed up with a vengeance. And whatever the government says, double that, by the way. That's what inflation is at, current inflation. So when they say it's 2.5%, it's 5%. And at the peak of inflation era, when we had it after the pandemic, because we printed and pumped in $7.5–8 trillion into the economy, inflation showed up ultimately. And Fed was late to the party again. What did they do? They start raising rates this time, right? So now we've been in a raising cycle until last September, where the Fed started cutting rates. If you look at all the macro data, the economy is softening. Unemployment rates are going up. And the Fed mandate is what? 2% inflation, full employment. Well, unemployment's going against it. The inflation numbers are hotter than expected, but now they're cutting rates. So I have done, about a year ago, I started talking about something called stagflation. You guys will hear this on CNBC quite a bit. Usually I'm early on these things. I've done a couple of videos. You can go on the channel and check out, search stagflation, what it is. Stagflation comes together by two words getting put together: stagnant economy, slowing down economy, and inflation, right? Inflation from inflation. That means you have a combination of slowing economy with higher inflation. But we're getting higher PPI, higher CPI numbers, right? So honestly, if somebody knows, let me know. There is no cure for stagflation. There is cure for everything else. There is cure for inflation, which is raising rates, which is what the Fed did. There is cure for deflation, although it's a horrible cycle, like Japan in 25 years, negative interest rates. So, but there is a cure. For stagflation, there is no cure. Let me explain why. Stagnant economy requires lower interest rates, right? Or slowing down, a slowing economy. But what happens when you lower interest rates? It fuels inflation. Get it? So we're in a box if we're in a stagflationary period. We can lower the rates because we think the economy is slowing down, unemployment's going up, all that stuff. And what is going to be, by the way, the effect of all this AI on unemployment? I think it's going to be huge. I think all these jobs getting replaced in the next 5 years, it's going to be huge. We have to deal with it. So that's in the future. So at the moment, if we have a stagflationary period, market's not reading into it yet, which is fine. But you guys will start hearing this tune on CNBC quite a bit, because all those clowns, they're just always late. They talk about it when it happens. So in a stagflationary period, if you lower rates because the economy is slowing down, you're going to refuel the fire of inflation. So you guys see what's going to happen, right? So if we raise rates on a stagflationary period to slow inflation down, then you're going to kill the economy. Do you guys see that? There's no cure for it. You're just in a box between a hard place and a rock, okay? So we'll see. We'll see. I mean, I'm trying to read the tea leaves. Look, I'm still up handsomely for the year. I think I'm up 4x of the indexes. I want to be at like 6, 7x by the end of the year. Hopefully I'll get there. The point I'm trying to make is that, though, whatever he said was a gift. There were a lot of people stuck in a lot of positions, I can tell, with what the market did with the Mag 7. Last week started with Palantir, NVIDIA, all these stocks. Even today, NVIDIA and Mag 7 are not acting well. But what I'm watching now closely is that should I be, because for the past 6 years, 7 years, Mag 7 and the top 10 stocks in the S&P 500, then those 7 of them are Mag 7, have become close to 35% of the S&P 500. And there's something else called, there's smaller stocks. They're still billion-dollar companies, but they're part of an index called Russell 2000. Russell 2000 companies are heavily dependent on interest rates. So they do like lower interest rates, smaller companies, because they do use a lot of debt and not much cash flow shows up in their bottom line. So they do use quite a bit of debt. So lower interest rates may be good actually for the Russell 2000 stocks. And with the Max 7 not doing much, that's why NASDAQ and S&P 500 are up a little bit. So the top 10 is okay, a couple of percentage points here and there, but the S&P 500 is up. Last time I checked, about 1.5%. So where is that coming from? It's coming from the rest of the group. You know, the 490 stocks who haven't done much during this all-time high grind that we've been experiencing, because at the moment the generals were carrying, right, this fight. Well, now the soldiers may be getting involved, because if we're going to be in a lower interest rate lowering cycle, those Russell 2000 stocks and the rest of S&P 500 may like it. So there may be some rotation happening here. And you can see today there is some rotation going on. The rotation is, you know, let's not just go buy crazy Mag 7 at high valuations, but let's just buy some of these beaten down stocks, right? And in the S&P 500, you will find about 400 out of the 500 stocks have not really done anything close to what the indexes have done. So I'm watching the Russell 2000, I'm watching the rest of the S&P 500, and I think rotation for myself, right, is the right thing to do. You know, NVIDIA only being up a couple of points when NASDAQ is up 400 is kind of strange, right? In the old days, well, where would NVIDIA be? It'd be up 10%. Well, it's not. Palantir will be up 10%. It's not. So I'm watching all these signs, and I'm not going to rotate yet, but there is time for rotation, because the S&P 500 has outperformed every other index, except with the exception of triple Q, obviously. Specifically, if you look at a ratio of Russell 2000 versus S&P 500, S&P 500, there are charts for these. You can Google it too. AI will probably put one together for you. S&P 500 has been outperforming the Russell 2000 for 6-7 years now. But when that rotation starts happening, right, we're talking trillions of dollars rotating, selling the top 10 of the S&P 500. That doesn't mean they're going to go down or crash or anything like that. But the rotation happens because the top 10 stocks, right, they're 3-4, well, in NVIDIA's case, $4.5 trillion market cap. But all the other stocks in the S&P 500, if you look at market capitalization, and as you guys know, S&P 500 is a market cap weighted index, the rotation will happen, and you guys will see it in the charts of these stocks, of the secondary stocks in the S&P 500 or Russell 2000. They'll start going up. Well, the moves will be much larger for the fact that when rotation happens, trillions of dollars start rotating. These stocks don't have that many outstanding shares. Like, as you know, NVIDIA has, let's say, you know, 2 billion shares outstanding, or 3 billion shares outstanding. But when you look at a $5 billion market cap company in a Russell 2000 stock, they probably have 50, 80, 100 million shares outstanding. So to move those stocks with the rotation is going to be a lot fiercer and a lot easier. So that's what I'm going to watch next week. I cleaned up a lot of stuff today. I cut the, you know, I'm literally like 88, 90% cash now. I just want to take a breath. This was a gift to a lot of people. A lot of people were stuck, I can tell. And so, yeah, that's where we are. And Jay Powell, I guess he got nervous. He didn't want to get arrested. But yeah, I mean, those news reading algos, that was something in the morning, right? The market actually was about to sell off, because it was like NASDAQ was up 100. It went down to unchanged. And I'm watching this 2-minute candle. It was like a straight up screaming candle. NASDAQ went from 0 to plus 300 on NASDAQ in like 3.5 minutes. So I'm like, hey, you know, that's what happens. All right, folks. Good morning. Good morning, Manny. Good morning, Doug. Good morning, Traveler. Hey, Len. Good morning. Hope you shorted Joby. Hey, look, I have a viewer from UK. Okay, see, right now in UK, oh, it's not that bad. You're watching me while you're eating dinner, probably. Is it 6 p.m. or 8 p.m. in the UK? And here's the big winner of the bunch today from, I don't know where he's at, Puerto Vallarta, or where the fuck are you? Are you Cancun? Wherever you went. So you know, he's one of my members, and we have a bet. So he's a proud owner of NIO for the last NIO, the Chinese EV maker. Has been the proud owner, holding the bag forever. Look, I'm just going being honest, Zaven, so don't get pissed off. And NIO went, today is a 6.5. It basically more than doubled. It was like $3 about a month and a half ago. So we have a bet. By the end of the year, if NIO hits 10, he said you have to wear a pink tutu. And I go like, I'll oblige if it hits 10, because he needs 10 to break even. He's been holding it for like, I don't know how long. But so, you know, for people who don't know, I have a members group, wild group, really. So you can become a member, click join, and then I'll send you the Telegram chat group. Like, that Telegram chat group is funny, you know, but I post my trades there, live basis. And again, none of it is trading financial advice, but and I post my positions at the end of every day. So, and you will be part of a members only live stream every Wednesday. So you're getting a lot of value out of that. But so long story short, if NIO gets to 10, so pray for me, folks, that it doesn't get to 10. It's 6.5. So it has another 50% to go. The odds are still on me, but if it, you know, that's crazier things have happened. Okay. So if NIO gets to 10, I have to wear a pink tutu. I may even have to do a power hour with a pink tutu. Not just for the members group, but I may have to show up on YouTube with a pink tutu. I don't know. So God bless. Don't, you know what I say, Zaven? You know, I taught you one thing. If I didn't teach you anything else, I taught you one thing. Bulls make money, bears make money, pigs get slaughtered. Sometimes taking small loss, because I said, you know, don't be a pig in the chat. And he was like, I'm not even yet. I'm like, okay, then fine, whatever. You're not learning anything. James Smith, 40 trillion debt for, yes, sir. Did you watch my last 2 videos? It's on the channel, James. Please go watch it. One is about the 37 trillion debt to be about 38 in 100 days. The interest rate actually is going to be higher than that. And then I have a video that I put out yesterday where a lot of people are watching. It's about who's holding the $37 trillion debt bag, right? And I have a video coming up probably on Monday. I think it's on Monday. I have a schedule. I don't know. I explained the carrying costs of that 37 trillion in debt, because all these notes and bonds and bills we issued 1 year, 5 year, 10 year, 20, 30 years ago, they were at much lower interest rates. Now they're maturing. So when they mature, we have to replace them. We can't just say, oh, I'm just not going to pay you. No, those are IOUs. Well, since we're still running 2.5 trillion a year deficits, we need to issue new ones. But on top of that, we need to replace those older ones at a higher interest rate, because that's where the bond market is requiring. So Fed lowering the rates means really nothing. So yeah, exactly. Actually, the average coupon on our outstanding debt at the moment is 3.2%. So that's going to keep going higher. I got a tickle. And this year in 2025, our interest cost on that 37 trillion debt to be 38 in 100 days is $1.2 trillion, right behind Social Security spending. We are almost 50% above defense spending. Okay. We are, I mean, it's become the second cost for the government. 1.2 trillion just in interest we're just paying around the world for these IOUs. Could we not take that 1.2 trillion and use it in this country for some good? Of course we could, but we can't, because we have the debt. And the debt's going to keep going higher. This is just a given. And with what Powell said today, he literally said, not literally, but he basically said, we can't stop the music. We're playing this musical chairs. If we stop the music, shit's going to hit the fan. And look, Trump administration came in with good intentions. You know, we're going to cut the debt. You know, they're talking about this tariffs are going to make. What are we talking about here? The tariffs, they're going to collect $400 billion, maximum $500 billion, which is bad, actually, because look what Walmart said yesterday. Every time a container is coming in, the prices are going up. Walmart has to start raising prices. That's why Walmart stock went down yesterday. So that's a lagging, you know, there's a lag factor here. It's going to show itself up, these tariffs. Yeah, the government's going to collect hopefully maximum $500 billion from these tariffs. And they said, we're going to pay down debt by collecting these tariffs. What are we talking about here? Our interest rate cost is $1.2 trillion. Who cares if we collect $500 billion? And that $500 billion is going to cost the average American more in higher good prices. And that's the inflation part of the stagflation. You guys see what's happening here? Okay. Look, I'm not negative. I'm just calling it the way I'm seeing it. I'm just a messenger. Don't shoot me. Yeah. Next year, we're going to be 1.5 trillion next year. In 2026, interest cost, because we have about 8 trillion coming to maturing this year. Now we have to replace those, right? When they replace, we do auctions. There's billions of dollars worth of bonds, notes, bills being sold. So the government also is looking at it this way. They go, okay, our 30-year bond is maturing. Instead of issuing 30-year bonds, we're going to issue short-term notes or T-bills. Okay. And then force the Fed to cut the short end of the curve, right? Because when they cut it, the T-bill rates will go down. Like the 4% APR you get in your Robinhood account is not going to be 4% next month if they keep cutting. It's going to be 3.5%. Then it's going to be 3%. So they can affect the short-term end. But when they're looking at it, okay, I replaced the long stuff with the short stuff. But at some point, you need long maturing bonds in your system. You can't keep like doing that stuff. You could for a little bit. I'm not saying they can't, but that's the macro side. That's what I'm seeing here. I don't know. Yep, this is proof that you earned them. Yeah. Hey, look, it's not for everyone, okay? Market tanks, market goes. I try to stay like a dead man's EKG. That comes from years of being under pressure and seeing everything, experiencing everything. So then I can't get too high with my winners and I can't get too low with my losers. Otherwise, I'll be a Xanax baby. I'll be like in the nut house. And I've been doing this for 30 years. So I'm still here. I'm not in the nut house, although I may sound like a nut once in a while. And I do get hot once in a while, but I try to control it. Well, not control it. I'm able to do it. Most people can't do it because it's money, right? It affects your livelihood. And that's why from the first day on this channel, my advice, if you call it that, has been if you risk manage correctly, if you position size correctly, and if you're patient, you will be like me. But for most people, it's really difficult to do that. It really, really is difficult. Like take losses, manage gains, position size. Most people YOLO things and things. I can't YOLO. Like, okay, I'm going to talk about it. I had a loser today. Literally, I had one stock open down 30% from yesterday. Today. I'm not ashamed to say it. I did it. I got stuck with it. I mean, it was 18. I paid $480 for it or something, 1,500 shares, right? But I have a 6-figure account. I could have bought 10,000, 15, 20,000 shares of that. I didn't. I allocated maybe 6, 7%. Okay. Literally, you closed at 480 yesterday, opened at 3. Okay. $2,000 loss, 2,500 loss. It bounced to 340. I'm gone. Took my loss. Most people would be just, no, it'll be fine. It'll go back up. I'm like, I can't deal with that. I didn't sell it because I needed the money. I'm 80, 90% cash already. I just don't want it to bleed. I just don't want my eye to look at that day after day red and remind me of the F up. It's psychological as well as financial, obviously, the game we're playing. But that's why, like, am I upset? Of course. When I saw it at 3, did my heart go blip for about a millisecond? Oh, shit. I go, yeah, okay. Immediately thinking of repair. What can I do? Is it optionable? No. Do I buy more? Absolutely no. Good money after bad. Don't ever throw good money after bad. Number 3, what do I do? If there is a bounce, do I sell it? Well, sure enough, it went from 3 to 340, and I was like, hey, you can have it. Done. So I lost $150-ish, $140 on 1,500 shares. Okay, I lost a couple of grand. No problem. But that's what keeps me cool and calm. I'm just like, market's going to do what it's going to do. I have no control over any of that. But what I have control over is on my end, I have control over my account. I have control over my position size. I have control over risk. Those are on me. Market's going to do what it's going to do. It's going to go up, it's going to go down, it's going to crash, it's going to zoom, whatever, right? But that I can't control. But I can control allocation, I can control duration, I can control structure, I can control all that stuff. So if you control all that stuff, at the end of the year, oh, you're up 70%. Okay, cool. That's the only thing I'm trying to do, man. I can't. Oh, 6 p.m. I was right. How's the weather in London or England? Hopefully, I don't know where you are. So FYI, James, I'm a huge Liverpool fan. I've been a Liverpool fan for 25 years, and I've actually gone to some of the games when I was in Europe, and they're at the peak now. But Jurgen Klopp started it, so if you're in London, you're probably a Tottenham fan. Or maybe you're a Man United or Man City fan. I don't know. One of those three. Vic G, good morning, good morning. Okay, James Smith. What's your thoughts on go watch those videos. I have like literally 30 videos on my channel that I started the channel because of that. Just go watch all those videos. I think it's horrible. I think it's the worst thing. But we can't stop the music. We got to print and spend. You can't print yourself to prosperity, folks. Can you do that in your own household? Can you do that with your own budget? I would love to. I would love to add zeros to my ledger like the federal government, Treasury does. I can't. I don't have a printer. So I call us like much larger version of Greece. Not Venezuela yet, but if stagflation happens, we may get there. Because the dollar has declined 11% this year, US dollar. You literally have lost 11% of your buying power, folks. So the government goes gaslight you and says inflation is 2%. I'm like, bullshit. It's not 2%. Not at all. You know what I'm saying? Yeah. So you're having a margarita and thinking of me in a pink tutu, I'm sure, right? Because you posted the picture already in the chat. So now I'm going to go buy puts. I'm going to go buy puts on knee. I'm going to tank that thing. Just I'm going to make sure. I'm going to call my Goldman boys. I'm going to say, make sure we do not get to 10. But what are you going to lose if we don't get to 10? Are you going to wear the pink tutu if it doesn't get to 10? Because that it has to be a fair exchange. I'm a good handicapper. I'm not going for like, odds are yours, evens are yours. I sit on my butt. It doesn't work like that. So we need to discuss that. So when you get back from Mexico, we will have to set this bet straight because the night we made the bet, we had some whiskey or apple juice. Never mind. Maybe you didn't, remember what the bet was. Yes, please. Like there's two of them actually. Yes, I posted one yesterday. I posted one. Debt is. I'm not against debt. I have personal debt, credit card debt, mortgage, this and that, but it has to be managed properly. I am not Dave Ramsey type that go, all debt is bad. I'm like, no, bro. No, debt is great. I mean, how much greater could it be? You have a bank lending you money for 30 days at 0 interest. They float your money. When you put your paycheck in the bank, they go, oh, we have to put a 5-day business day hold on it. What do you think they do with all those deposits? They float your money. They go to T-bill, they buy T-bills, they earn interest on that. Well, if the bank is telling you have 30 days to pay me back, spend all the money you want. But then what they do, they know is that everybody carries balances. That's where they make the money. But once you start carrying the balances, like 30% a month, APR. So I go like, oh, you want me to float your money? Gladly. So you float my money for 5 days when I deposit something. But I can float your money for 30 days? Sure, no problem. I'll float it, but right at the end, I'll pay the balance. Credit is wonderful. Who says credit is not wonderful? But most people can't manage credit. They're crack addicts. They're plastic crack addicts. That goes for the U.S. government as well. And it goes for the average American. Credit card balances through the roof. Yeah. Well, you're in UK. I mean, UK isn't deep shit as they are. So, I don't know. Yeah. Yeah, pretty much. About there. This year, a little bit less because of the tariff income. It's probably 2.2 this year. Still, it's trillions of dollars, man. James says, what happens if it hit 1.6 trillion a year? Well, the dollar, look at, okay, so I'll put when I'm doing the chart, stick around. I'll put the DXY. DXY is the dollar index against the basket. It's down 11% this year. It's toilet paper. Actually, I have a good video coming up next week about the trash US dollar. It's toilet paper. It's not mean shit. Why do you think gold is doing what it's doing? Why do you think stocks are doing what they're doing? Why do you think real estate is where? Why do you think Bitcoin and Ethereum now are where they are? This dollar is losing its value every day. And then the American folks are thinking, yeah, I got a 4% increase on my paycheck this year. Who cares? You're losing 6. So you got to make that up too, and you got to make up more for your future. You got to have like 10% return in something, right? So take out 4 or 5% inflation, take the taxes out, so at least you gained some traction of keeping pace with all this. But most people don't talk about that. They don't even understand. They go like, oh, I'm so happy I got a 4% increase. You didn't get shit. Because the stuff you're buying out there, probably frivolously, no need to buy this stuff. Half the stuff people buy is gone up 6%. Okay? What happened to your rent? What happened to your car insurance? What happened to your health insurance? What happened to your food? What happened to everything else you have bought over the last 5 years? It's up 25, 30, 40%. Your water and power, all the stuff, right? People don't think about it like that. Oh, I got a 4% increase. I'm like, you got nothing. You got nothing. I don't know any USA tariff effect is. Come on, bro. It's the president. Respect the president. There you go. Old Trafford. Man United, you guys are having a tough time. Although you had your days, Sir Alex Ferguson, right? Golden era of British football. Okay, cool. Man United. Why'd you guys sell, what's his name? Ashford? Was it Ashford? Rashford to Barcelona. I mean, my number one team is, I don't know where my hat is, but is Barcelona. My British in the UK, it's Liverpool, but number one is. Oh my God! Typical Armenian. Typical. Eventually, actually, those are not words we're looking for here, sir. Okay, those are not what we're looking for. Actually and eventually. That sounds like a $3 lawyer speak to me, and you're not a lawyer, I know. Yeah, so no, it's not that bad. I mean, you just got to know how to weather the storm. Wow, you guys are some questions, man. Okay, do I think America will go bankrupt? America is bankrupt. It's just the levels of it. America is bankrupt. What are you guys talking about? If America was a company, where would it be? Where would their stock be? 0. 37 trillion in debt, no assets. All I'm saying is, look, this is so out of hand now. That's why the market reacted it did, right? Like, we can't stop the music, man. That's why I've been saying for a year on this channel. We can't stop the music. We got to continue. So we got to keep printing and spending. So yes, there'll be corrections, but you got to invest in hard assets. You just keep investing. Dollar cost averaging. Trading is one thing, investing. Just because we can't stop it. If we stop and say, no more debt, balancing the budget, we're going to lower the deficits, debt, national debt, I swear to God, the market will tank. Because it's about liquidity. All that printing creates what? Okay, so we need $2.5 trillion this year to balance the budget. Where does the $2.5 trillion come from, and where does it go? Okay, think about it. It comes from thin air. It gets created, right? And then it's pumped into the economy. That's why we're holding it together like that. But on the next one, on the next Black Swan event, because during COVID, we needed, okay, during 2008 financial crisis, we needed 800 billion. During COVID, we needed close to 8 trillion. There will be another one at some point, I'm sure. What are we going to do? 20 trillion? See what I'm saying? It's just never going to end. It just cannot end. Because if it ends, Bitcoin will crash, gold will crash, stocks will crash, everything will crash, real estate will crash. But all this money coming into the economy has to chase return. And all this money pushes assets higher and higher and higher. You guys have to catch up with this program. Catch up with the program. I've caught up with that program a long time ago. On the channel for a year, maybe. But in private circles, I've been saying this, and I'm like, bro, you just got to buy gold. You got to buy real estate. You got to buy stocks. You just got to buy because it's simple. It's simple. One of my clients said, absolutely, well, that's the tulip of all tulips. AI, but what? How do you invest in AI? There are public companies, if he's able to invest in private companies. So is OpenAI worth $500 billion? I don't know. You can invest in AI maybe through Twitter, but it's public, maybe through Tesla. But there are some AI companies out there. In fact, I'm in one. I'm stuck in one, losing half a point on a couple, 3,000 shares. But investing in AI is not the question. How do you invest in AI? Like if you invested in NVIDIA, that's the #1 AI chip maker, you would have done amazingly well. But that game is going to come to an end too, right? Everything comes to an end. The cycle probably has a little bit more life to go. You know, instead of investing in AI, you can probably invest in data center builders and hardware, software, things like that. And there are millions of companies out there. But AI is definitely, for what it's worth, is the future, and it's going to replace everybody's job, including yours, Scott, because, you know, autonomous vehicles, right? Trucking, Starbucks baristas, they're all going to get replaced. What do we need humans for? We don't need humans, right? Humans are worthless. Zavan should... There you go. You see that, Zavan, right here? He has my back. Zavan shouldn't get off so easy. Sushi? Nah. One of you has to do a dance in a pink tutu. Yeah. Well, if I'm a man of my word. If it gets to 10 before the year, I'll do a pink tutu dance. I'm not ashamed. I've done worse. I've done worse. Oh, you've been to Camp Nou? Yeah, that's just a religious experience, bro. Yeah, I know he's on loan, but I honestly didn't think they needed him anyway. Well, maybe for, you know, Golski retiring. I don't know. He's getting old, but he can still score. That's right. LMAO. That doesn't work. That doesn't work. That doesn't work. LMAO. What LMAO? You just go. You can have another shot on me. Have a shot. Have a shot of tequila. You deserve it. Colin. Okay, welcome, Colin. You think option selling in a decade or two will be the way to decade or two? It's been that way. Actually, there's different things that you can do. Option selling, you know, my chat group understands options now. Selling options, selling calls, selling puts, all that stuff. There is great studies out there. Don't take my word for it. Option selling is not what it's put out to be. You know, there's a lot of YouTubers and things like that. They just glorify option selling. Although option selling has its place. Decade or two, no. There's all these structured product out there. Why do you think vol is getting crushed so much, Colin? Do you think our volatility should be here when the market's like at nosebleed levels? That you should be our volatility 15%? No, because all this trillions of dollars of structured product, they just keep selling options to provide, you know, a return. And but what happens? Okay, so option selling. What happens last week when Palantir went from 190 to 140 in like 3 days? You sold options. Now what? Okay, so option selling is fine, but there's many ways to skin the cat, and my members have learned that you know, being one-dimensional doesn't work. You think option selling in a decade or two will be the way to generate income? No, real estate rental is good. Look, real estate is basically real estate. What it does is it keeps pace with inflation. Real estate actually is not a great investment, honestly. It keeps pace with inflation. Again, location. If you bought beachfront property, obviously you're going to beat inflation. But I know from my own house, I've been in this house for 22 years, it's gone up about 110% in value in the last 22 years. Okay, what is that? 5% a year? That's about inflation. That's the inflation that keeps pace with inflation. That's all. You know, I mean, it's not a good analogy, not a good comparison, really. Selling options has a lot more risk, a lot more risk. Like, people think selling options is not risky. Whoever says that needs to go get their head examined, because they always make it look like, oh, I made money on this, I made money on that, I sold options. Market's been going up for 3 years, grinding higher. I'm selling puts, creating a 30% return in my portfolio. And then on that one crash in April, you lost your portfolio, right? So look, selling options has its place. I'm not going to deny it. You know, I do sell quite a bit of them, you know, but you also have to be directional. You have to buy premium. You know, when vol gets compressed, you need to buy premium. You can't sell premium when vol is 15%, right? So you just got to figure the different ways out, synthetics and all kinds of things. But possibly, I don't know. But not a good replacement for real estate, because in the real estate, unless you're in the hurricane zone, you have really very little risk. Well, the risk is your renter burns the house down or vandalizes the house or some shit happens, right? But you have insurance. Or he doesn't pay the rent, this house stays vacant for a while. I mean, things like that, right? I'm talking residential. It could be commercial as well. So that's one way of creating, return. But option selling and real estate are not really that equal, because option selling has so much more risk involved, so much more, which unfortunately most people don't understand the risk. Feel like AI will lean out the middle. Yeah, well, middle class have been getting, there's no middle class left in this country. You either have it or you don't have it, one or the other. Feel like AI will lean out the middle class, and if you don't have an edge, what is your edge? Yeah, I will do what AI cannot do. What is that? Do something with your hands. I'm not saying go dig ditches, but do something like become a plumber, electrician, air conditioning contractor. Because I have friends in that business. They're all driving, $180,000 cars and live in $2 million homes. I mean, that's what I'm telling my son to do. He's second year of high school. I go, shit, screw college, bro. You're going to be replaced. My daughter wants to be a doctor. I was like, don't be a doctor. You're going to be replaced. But, I don't worry about her that much. But I've spoken about this candidly. Yeah, AI is going to be trouble. I mean, at some point, maybe next year, if I'm still doing this channel, I'll talk about UBI, Universal Basic Income. I don't like the idea at all, actually. But it'd have to be a necessity. We can't retrain everyone. We have 280 million workforce in this country. I mean, we can't retrain everyone. Oh, be a coder. I'm like, no, coders, AI is replacing coders. I mean, I don't know where this is going. I mean, I'm not worried about myself. I'm something like at my age, I don't care. But I worry about my kids, obviously, Thumbs up. Don't drink too much. I know your crew is probably going to drink you under the table. Just don't get sick, bro. Just have fun. Enjoy it. Yeah, well, that's called a cap rate, right? So cap rates are down to like 5%. Still keeping pace with inflation. So, don't have an edge currently. Okay, what did you study? You know what? I should put that's what I should do. I have time today, so I'm just going to mess around, answer questions. Let me put the link up. If any of you want to come up, you're more than welcome to do so. Right here, StreamYard link. We can talk about anything you guys want to talk about. My opinions are my own. None of this is trading or financial advice. Let me get that out of the way. Don't have an currently graduate. Hey, grab the link. Come on, Colin. Currently trying to find that. Huge majority, 90%. Look, I'm a college graduate. I have an MBA. I have a finance. I was on Wall Street. At my day, it was worth something. Today, it's not worth anything. And most of these kids get sold the idea that they have to go to college. And if you look at the statistics now, that was true at some point, maybe up to 10 years ago. college earners in a lifetime would earn double what high school graduates would earn, college graduates. That's equal now. In fact, it's just skewing more towards the high school graduate, especially if you're like a plumber or whatever. Yeah. Oh, there he is. Okay, cool.
What's
All
up,
right.
brother? How you doing,
Hey,
man?
Colin, how are you, man?
Good, yeah. I watched your podcast with TJ the Wheel Deal. I'd say like a week ago. Saw your
Oh,
live come up on my YouTube, and I was like, oh yeah, I'm gonna hop in see what's going on.
not much, bro. Not much. Yeah, I haven't done his channel. I don't know what he's doing on his channel, but we text here and there. So I see
Nice.
I see you're a fraternity, or what's happening back there?
Oh, I'm just at a coffee shop.
Oh, okay, coffee shop. Okay.
Yeah,
So
yeah,
what
yeah.
what what you're graduating in 9 months? What are you studying?
I'm studying finance and real estate.
Okay. Okay.
So, not something like communications where I'm completely fucked, but
No, finance, real estate is good. What are you gonna do with it though?
so when I said I didn't have an edge, it's not necessarily true. My dad flips houses, invests in
Okay.
real estate,
Okay.
and he doesn't have any rentals or any of that anymore. He kind of just gets in and out within 3 to 4 months max.
Okay.
So my edge is in real estate technically,
Okay.
and I plan to not get a W-2 after school, just because I'd
Well,
rather.
yeah.
And
What
I just rather.
what part of the country are you in?
I'm in Milwaukee, Wisconsin.
Milwaukee, Wisconsin. Okay.
Yep. So it's a
Um.
pretty good real estate market for
Okay.
relatively cheap. It's not like California or anything.
Yeah. Wow. Yeah. California is ridiculous. Well, most of the country
Yeah.
is ridiculous. But
Yeah.
look, a lot of people make a lot of money in niches, right? In certain niches. And
Right.
you have an example in front of you. You have a dad who's done it successfully, I'm assuming, right?
Yep.
Nothing wrong with following in his footsteps, bro, or helping him
Right.
out, learn the ropes, right? What he's done and how he does it. Because even in the college, you can read all the books.
Right.
Being book smart means nothing to me. You gotta have but
Absolutely.
if you have the combination, book smart, street smart, you will do so well in this country. Like I'm
Right.
an immigrant. Most immigrants are really street smart. But if you
Mhm.
combine your book smart with your street smart, because we think differently, right?
Absolutely.
And you will do so well. And stay in your local area first. If you're going to expand, don't expand too fast. Think of all these things. And with the
Right.
lower interest rates now, hopefully, right? I mean,
Yep.
housing affordability is horrible at the moment, right? Because it's 30-year
Yep.
mortgage, 7.5%. So with lower interest rates, that may help you actually. By the time you come out, we may have like maybe 6% mortgages as opposed to anything else, and that's going to help
Yep.
move real estate anyway. So yeah,
Absolutely.
man. No, I think that's reasonable edge. I think it's better than studying anthropology or something like that.
Yeah. Absolutely, man. Yeah.
That's
Yeah. No. I kind of on the thing you're talking about street and book smart. My mom's an immigrant as well. She's extremely book smart and
yeah.
only book smart. But then my dad was in the military and he was an undercover cop, so he kind of for his career before real estate. So I kind of have that. I want to think I have that um, combination in a way, but where like you said, and I tell my mom this all the time, like, mom, it doesn't matter where I go to school, or even if I go to school at this point,
Means
because
nothing.
like you're saying, it's dude, no one cares. Literally, no one cares.
Look, okay,
Like,
so let's say you go to school 4 years, right? And
yep,
then you start looking for a job, right? Okay, so tell your mom to look at the statistics of college graduate unemployment rates
yep,
through the roof. You just went 4 years to a college, undergrad, right? Even
yep,
if you did marketing and whatever you did, business, they all say to me, "Oh, marketing." I go, "What does that mean? Starbucks barista? I mean, what does that mean? I don't even know what that
yeah,
means." You're gonna look for a $20 job, an hour job. So you
right,
incurred about 100 grand in student loans minimum, right? And I'm like, okay,
right,
now what? You're gonna pay that
right,
the rest of your life. See, that kind of debt, I'm against, completely against that kind of debt.
right,
And
right,
and tell your mother to look at college graduate unemployment rates. Just,
yep,
just I mean, it's government puts them out all the time. It's going through the roof. They can't find
right. No,
jobs,
I
bro.
no, I totally agree. Even with like, because I go to let's and like I know I'm not uh, portraying this and saying, "Oh, my business school matters." I'm going to a great business school at UW Madison, but even
Right?
then, it doesn't fucking matter because
Nope.
I still see these guys that are extremely witty and smart, and they're still having a hard time finding a job. I don't
Yep.
even need to tell. Like I've shown her some statistics, but I'm like, Mom, I know people personally that are having an extremely hard time getting an entry level job from not a mediocre college, from a very good college. It does
Yep.
not matter. No one cares, and
I mean, you
especially
still have a
a
little
few
bit
years
of an
into your
edge if
career.
you're like Ivy League or something like that, right? Because
Right,
Goldmans and Wall Street and whatever, if you don't look that kind of finance, they're going to come,
right,
grab you, or some
right,
hedge fund or whatever, right? But then besides finance, you probably should be in like math PhD and things like that to write some algos and do stuff like that. But all I'm telling you is that, look, I think you'll do fine. I think you have a dad that's done it. You have there's two things. You have um, proof of concept, right? He has proven it.
yep,
He has flipped it successfully, and then you have proof of
right,
work. Well, you
right,
have both. So learn from him. I don't know if you're close to
right.
your dad or not, but a lot of kids are like, my dad doesn't know shit. I'm like, no, your dad, first of all, your dad
No,
has
my
been on this
dad, yeah,
planet a lot longer than you. He just has the life experience on you. You don't know shit
absolutely,
coming out of college, right? So all
absolutely,
you know is how to play beer pong. That's about it. But
yeah, yeah, no,
no, I
yeah, no.
mean,
Me
what
and
I'm
my dad
saying,
are.
yeah, just
So, sorry,
stay
go on.
close and learn. And, you know, man, you guys are so young. I mean, once in a while, I tell my daughter she wants to be in biotech, which I'm all for. I go, don't be a doctor, do something else, go cure cancer or something.
Right, right,
But my thing is with you guys, sometimes I go like, I wish I was 20 years younger. And then I go, no, 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 no. They're gonna deal with AI. They're gonna deal with robots. They're gonna deal with all this stuff. I go like, I don't even want to deal with that. I just want to retire in Spain. That's all I want to do.
right. Yeah,
You know.
yeah. No,
But
that's
no,
the thing
man.
for me.
But what about options? Do you trade? Do you dabble in options?
Um, I've dabbled a little bit here and there. I got burnt a little bit on the buy side, of course, and I'm about break even all time on the buy side. And then
That's good.
I do enjoy the. Yeah, it's good.
I
Have
break even
one
is good.
huge. Yeah, I'm break even, and it's honestly taught me a lot. Not even just in like the trading road, just psychologically, mindset wise, not taking losses too seriously. And then yeah, no, I was like this. I looked on the selling side now. I'm just kind of getting my feet wet, so I've never sold any options or
Okay.
anything like that.
So,
But
if you watch this channel, you're going to learn a couple of things. So, every day in the morning, almost every day, I start with the day is like, did I mention I hate covered calls? Right. I start with that. I've taught them pretty much to not do that any longer because some of them came from TJ's side. They
yeah,
go like
yeah,
cover calls and then they watch a stock go up 300% after they sell the cover call. I'm like, it doesn't make any
yeah,
sense whatsoever. But
right,
in options, there is so much to learn. There's so many different things you can do. So don't be like try to add tools to your toolbox all the time. Okay.
yep,
And learn the Greeks really well, learn the relationship, implied volatility and how they work, with the Greeks and what higher implied volatility, how it affects gamma, how it affects all the other Greeks, the Vanna, the charm. Learn all those and understand it. Learning is one thing, putting it into
right,
practice is something else, right?
yep,
And be mindful that selling options is not risk free.
yep,
Very risky, right? I mean, we had an example in April. If you sold options, I mean, you could break accounts selling options, but that's when risk management take losses. You just got to take losses. You can't just go, yeah, it'll come back one day. So
right,
look, everything has its risk. Buying,
yep,
flipping homes has its risk. Options has
absolutely,
its risk. Look, getting in your car today has a risk,
yep,
right?
yep.
So
Yeah,
you need to
I've
figure,
actually
in
told many
life,
people that.
you have to handicap the risk. Okay, what's my risk? What's my reward? Where do I want to
Right,
stop this if it gets out of hand? What is my plan? What is my exit? Do I have an exit? Like when you buy a house to flip, you have an exit plan. You're
right,
gonna redo the toilet, you're gonna redo the flooring, you're gonna maybe do the roof and then flip it. Well, that's your exit
right,
strategy. You need to have an exit strategy when it comes to trading as well. You need to have one. I
absolutely,
mean, most people go like, "Ah, it'll be fine." I'm like, I don't know how they do it. Well, that's why 90% lose money, I guess.
absolutely right.
Yeah.
So so when you like, and I completely agree with you, and I think I was thinking about this a little bit wrong, where selling options. not that it doesn't have risk, and I thought it did, but then when I'm thinking of like real estate and some other things, like maybe it's just on the top of my mind now because a huge flood just happened here, and this office building that someone I know personally, he's got to spend now 500 grand because insurance doesn't cover it. And like you were saying, tenants, politics, rates, all this stuff. It's, to me, having rentals and single families is still attractive because you gain that equity over time, and all these, there's certain different things, tax advantages that you don't have through selling options. Maybe I'm wrong in that regard.
No, you're not
but-
wrong. Real estate has its advantages for sure. The other thing is
Right.
that, well, there's different types of real estate, as you know. There's commercial. There's like commercial is dying. I mean, you can, some of these building prices that I'm seeing getting flipped at are getting flipped at like 80% of initial purchase,
Yep.
lower. So I think maybe you should look at residential first, because commercial
Yep.
has so much, headwind at the moment, right? Work from home, AI is coming. Do we even need people at offices? I'm not sure. So there's a lot of questions. But
Right.
most families or most people need a roof over their head, unless they're sleeping in the car,
Right.
But you don't have to go to the office, but you need a roof over your head for security, safety, whatever. So I think residential makes more sense to me at the moment.
Absolutely.
But your analogy when you asked me the question was like selling options versus that. Definitely less risky. I mean, selling options is a lot of risk, bro.
Right.
People just don't understand it. To be, what do you? I mean, I don't know. Maybe I've done it so long that I just kind of go. I hear like a lot of people on YouTube or X. Oh, selling options create income. Great.
Right.
It works when the market's just kind of grinding higher and higher and higher, right?
Right.
Selling options, and they're going to expire worthless most of the time.
Right.
But how do you do that
When there's a
when,
down bear market.
look, not just down or up? I mean, look, selling options both ways could be risky. A lot of people sell strangles and things like that. I get it. But once you know what to do, see, this is my advice to you if you're going to trade options.
Mhm.
Stuff your toolbox with everything you can.
Right.
So each tool you have in there, you may just use it once a year. So there are tools like a carpenter, there are tools that you use every day, basically, in options. Okay. But then there are special circumstances that if you do understand it, my God, this tool is good for this job, this tool is good for that job. So once you have that full toolbox, then you can actually increase your ROI because you apply the right tool for the right job. I'm talking
Right.
trading now, right?
Yep.
It could be long, short, it could be anything. But once you have that, it gives you such confidence that, and you do it before, and you go like, oh, I've done this before. I remember this. This is this. The chisel I need for this job is this, not this other thing, And once your
Right.
box is full of tools, it'll become so much easier because a lot of people stay one-dimensional, right?
Yep.
Sell puts, sell cover calls, sell puts, get assigned, aggressive call selling. Is like, I mean, that doesn't do anything. And
Right.
for me, last but not least, for me, I'm not trading to kiss my sister. I'm trading to get 5, 6, 7x of the S&P 500 a year. Because there's taxes, short-term capital gains taxes, there's slippage, there's commissions, all these things. There's inflation. If I can't do that, I wouldn't even trade. I don't want to trade. Like if I get 5x of like if S&P is up 20% and my trading account is up 100%, yeah. And one last thing I'm going to tell you. You're like 20, what, 21, 22, 20?
21.
21. Please don't mix your trading account with your investment account. Have an investment account.
Okay.
Whatever you can put in there, something called dollar cost averaging. Please
Yep.
put $50, $100, whatever you can do a month. I'm not talking a week, a month, or 300 or 200. Maybe this month you couldn't do it, next month 500. Just drip, drip, drip in there. Don't even think about where things are at. Dollar cost average into an index.
Absolutely.
Good times, bad times, you have all your life ahead of you, okay? I'm telling you something. If you just put in $100 just $100 a month. Okay, and dollar cost average into the S&P 500. In 40 years, when you're 60, not even retirement age, that's $1 million. $1 million.
Yep.
Don't you? When that's besides your other income, that's besides your 401k, that's besides your retirement plan, that's all that. Just put $100 and forget about it. Like
Right.
every first of the month, $100. Buy the SPY.
Right.
$100. Buy the SPY. I'm telling you,
Absolutely.
that would be my advice to you. Just do it, bro.
Right.
Just you know, do it.
I appreciate that. Can I ask you one more question?
Sure.
I don't, and this is and I know you're not gonna know the answer. I kind of want your opinion, obviously. Like for me, I'm currently debating in my head, like the last week, 2 weeks, do I go and get a W-2 job, or do I kind of say, screw that, go all in with, and I've been learning from my dad, but keep learning from my dad and try and build a business around like have the flipping and
Okay.
also
Do you
build a
live at
good
home?
business.
Do you live at home?
I do live at home, yes, sir.
Okay. So you have no rental cost. Do you
Yep.
have? I mean, look, you're 21. You're just starting life. Do you have some money saved up, or do you have?
Yeah,
Um,
I have about 7 grand saved up,
okay.
so
Well,
not too much,
so
but
you,
and I have no car payment as well.
I would, I don't know your credit card situation. I don't know your car loan if you have one. The things I don't know your
No car
situation.
loan.
What I'm telling you is you have some money saved up, which most college kids. Do you have student loans?
I have zero debt.
You're at home. Keep your costs low as long as they're not going to kick you out. Okay, keep your costs low. Keep
Yeah.
keep keep. Start investing first of all, right?
Yep.
And
Yep.
not trading, investing. And
Okay.
initially, you need cash flow when you get out of college. Are you working during college? Are you doing something?
I do side jobs. Like I'm somewhat handy. So I
Okay,
do some side jobs for some flips and whatnot, and I also have my own truck. So
okay.
I
What is your well? Have you tried some of these like gig work type of jobs? Not, I'm talking about like roadie and like taking paint to from somewhere to somewhere else. There are now. There are no
right.
joke. They pay well.
Yeah.
So if
Right.
you
Yeah.
have your
Yeah.
truck that's paid off, you can utilize that. I mean,
Uh,
I'm not a huge fan of W-2s.
that
I've had
I
one. I've had
yeah.
one for like 22 years, 23 years while I was on the trading desk. But you can't look at it as a W-2. We had bonuses and we had way different things.
Right.
But what is the W-2 that you can get at the moment where you live? Like what would be the top W-2 earning possibility for you?
Earning possibly. Okay, I was going to ask income wise,
Yeah,
probably
yeah.
some sort of financial position, not obviously investment banking, but just some sort of position at like a bank.
Okay, like
Would
bank
probably
loan
be
officer or teller to start at a teller or something.
no, not a teller. I'm just like an analyst.
Okay,
And probably the most I'd be capped at, like the people for my graduating class, they average about 75 grand a year, but I think in Milwaukee, you're more like 65, 70 at the most a year
can
for
you
a
live
job I could get.
comfortably? Can you live comfortably with that money in Milwaukee?
Yeah, honestly, you can.
Okay. Well, are you sending out resumes and stuff?
I'm not just because I've been working,
Okay.
with my father and doing all this
Well,
other things,
I
and I
I would, what I would do. You're 9 months to go, right? What I would do is, I would give. I mean, I did that, but I would give myself a break. Although I got hired literally day out of college, but not the same time, not the same circumstance. What I would
right,
do is I would give myself a break while you're hunting for a decent W-2. Well, that's a decent job, right? But again,
mhm.
it's AI sensitive. I don't know how easy
Yeah,
that's going to be. But what I would give myself like a 6 month break after college. So you have 9 months to graduate. You have 6 months on top of that. You have 15 months. Start looking for a decent W-2 in those times because it's not going to be hired like this. While you're gaining experience, maybe with your dad, do some side jobs. Maybe it's just flip a house or get the experience building that way. And
right.
then you just make a decision. I go, okay, well, I just got offered a job, secure job, with benefits and things like that for 70K, 60K. Take
Mhm.
it. for a couple of
Right.
years, suffer under
Yeah, yeah,
somebody's thumb. You go like, hey, Colin,
yeah.
you got to do this today. Okay, sir.
Yeah.
But do
Right.
that. Yeah, I mean, look, man, you have both sides of the world, right? You have your independent stuff with your dad, and you have your W-2.
Right.
But don't stay with the W-2. That's not going anywhere.
Yeah, I just know that's kind of what my second comment to you was, is like you said, the middle class is already basically completely
Oh,
leaned out, and it's going to be completely wiped out in however
decimated.
many years we're not.
Yeah,
Right. So
for
that's
sure.
for me is like also what I was talking about to use the edge. If you don't have whatever your edge is, I don't know what it is, anything besides
I
a
mean,
W
edge
two.
is important, but I think you're at least not didn't study some useless subject, right? It's still
Right.
valid. You learned a lot.
Right.
Now, maybe a couple 3 years of a W-2. Collect, save your money, collect some
Yep.
more. Maybe they'll let you live at the house for those 3 years. You don't have any expenses, save it, and then you have your own fund to start flipping, doing all these things. And look, man, you have to have your own business.
Yeah.
Then you can control the
That's what I'm here
pricing.
for.
You control pricing that way. You see, if I'm like a plumber or anything else, I control my pricing. I'm going to go put a bid on a job, but I'm going to control my cost, my pricing. At a W-2,
Right.
I'm like,
Right.
you don't control pricing, right?
No,
But
absolutely.
that's what I would do. I mean, you know,
Right.
that would be my suggestion anyway.
Yeah. And I shouldn't think about options as like the golden
No,
ticket out.
no, that's not your golden
Yeah.
ticket. No,
Yeah. Yeah. Yeah.
I'm telling you, have two accounts: one trading account, one
Yes, sir.
investment account. Investment
Right.
account must have that drip, 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 drip. You gotta do that, bro. You're 21. I'm telling you, you're gonna look at it in 10, 15, 20 years, and I'm sure you're gonna be very successful in other things you do, but that money is gonna the effect of compounding is like a miracle. And most people
Yeah.
don't even
Absolutely.
understand it. And I'm going like, oh, but what if the market goes down? Who cares? Look at
Right. Right.
150 years. It's 10, 11% a year. And the compounding
Yep.
effect of that. Now, if you were 40, I
Unreal.
would go, like, maybe not. But you're just 21. Just
Right.
do it. $100, $200, whatever you can put in there. Dump it in there. Don't even look at it.
Right.
Whatever the price is that
Absolutely,
day.
man.
$100 worth, $200 worth. You're gonna be so happy, you know.
I
But
really appreciate it,
no,
man.
thanks for coming on, man. I appreciate it.
Yeah, man. Thank you for all this the content you put out, and honest, if being completely honest with you, I've only watched the podcast with you and TJ, but I thoroughly enjoyed it, and I think you guys are doing God's work
Well, I
out there,
appreciate it, man. I'm just
providing
doing paying it
education.
forward. I don't want
Yep.
to do it, but I don't have to do it. Paying it forward, teach some people because I believe, like you went to finance. I believe from uh, um, elementary school all the way to college, kids are not taught about finance. Kids are not taught about
No.
money.
No.
They're not because that's on purpose. They want to make you like a credit card crack addict. They don't teach
Hmm.
anybody any. Like they teach kids everything in middle school or even elementary school about sex and this and that. But talk to them about money because you need
Yep.
money, bro. He's like,
Right.
you need to live. So I wish
Right.
I
And
wish you know that was the
I
case, but
I
they don't.
completely agree with you. I have someone, my girlfriend's friend. She's just completely oblivious to money, kind of like my girlfriend is as well. But she's completely oblivious to money, and
Yeah.
she goes to school in Minnesota, which is $40,000 a year.
Huh?
And this girl, her parents don't pay for any of her college, so she's going into $120,000 in debt for a psychology degree. And I'm telling her this is devastating because her life, unless some miracle happens, will never be the same.
So
Because you're
marry a
going
rich
into
guy, maybe.
and that's exactly what I said. I told her, "Hey, she's gonna have to marry rich, or else this is just like she's at a
You
lost
know,
cause because she's gonna be
that 120 is not going to stay at 120. Probably by the time she graduates, if she does, masters, that's going to be like 200 grand, right?
right."
200 grand. I swear to God, the interest rates are so high on those student loans. She's going to pay that for the rest of her life. And I'm going like,
Yep.
that is like the most backwards bullshit I've ever heard. I mean, that's another thing I'm like completely against in this country. I mean, why should people come out of college with like I call it like a ball and chain at their feet. I'm like, let these
Yep.
young people run, bro. Why should they be
Absolutely.
paying? But that's also marketing. That's also addiction to
Yep.
debt, right? I'm like,
Absolutely.
just I'm telling you, just don't go to college unless you're doing something that's still needed, maybe,
Right.
maybe.
Right.
And
Right.
I'm like, I don't know. Yeah, I've changed my tune about college like 180. I was like, yeah, you have to go to college. Now I'm like,
Right.
no, you don't have to go to college.
I completely agree. I've seen a bunch of people like my dad's age, and I'm assuming my dad and me are around the same age. And like his friends used to be college, but now it's just a complete 180. If you really just look at it, like for me, the only reason I was really able to go was because I knew my parents. I was able to go without having a single loan or any debt.
Yeah,
And then it gave me the one thing I think it does give you that 4 year buffer to
yeah,
not figure yourself out because you never do, but it gives you more time to whatever think. I don't know,
absolutely.
but for the people like you said that study something that's completely fucking useless, which is going to be most of the things, right? But then you're also incurring the debt on top of that. It's just like a black hole that you're putting
Yeah,
yourself into like a fucking hole
yeah. That's because
because
they
you
don't
just
understand math, right? They go
finance and the
like,
money,
oh
right?
yeah, I just finished college. I'm like, okay, so your payment on your student loan is like 2 grand a month. How are you going to pay that back? What kind of job can you get? And then even if you get a decent job, it's sucking out so much of your cash flow that you can't even enjoy life until that thing is paid off, you know?
Exactly.
And the look, the proof is here. The proof is look at the college graduate earnings versus high school graduate earnings 20 years ago. Huge difference.
Yep.
And so this was college, this was high school, right? It's become like this now. In fact, now it's
Yep.
here, almost even actually. But now, if you consider the high school graduate is like last maybe 2 years of high school, they've done some sort of vocational work or school or apprenticeship or whatever, learn something, it's going
Right.
like this now,
Yep.
right? And
My
AI is
friend
going to
that's
definitely suck a lot of that, the college bullshit, right? So I'm like, you need to understand this stuff,
it's
man. You need to learn this stuff.
it's
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 like,
just so it's so interesting because I'm just living through it right now and seeing, even I'm a victim of using AI all the time on assignments that I don't need to be spending my time on because
yeah,
I don't need. I have really learned not many things. I've learned 20 different things, but I'm good at maybe one.
yeah,
What does that do for me? It doesn't do anything for me, and
yeah,
and I'm also this is also my fault. I'm not blaming this on anyone else. It's my own
yeah.
fault that I'm not extremely good at one thing, so I can't make a lot of money because I'm not really good at one thing. I'm knowledgeable or at least aware of 20 different things. But that doesn't fucking matter.
Well, that's
No
another
one
thing.
cares.
Last but not least, let me tell you this, right?
Hmm.
People work all their lives because of the paycheck. But if you can, 90% of people who work hate what they're doing. Those are valid statistics. Okay.
Yep.
Very lucky people, maybe 10% of the population does something that they love doing and they earn a great living at it. Right. And I consider
Hmm.
myself blessed. I consider one of those people that I love what I'm doing. I have the freedom, I have the availability to be there for the kids, family, whatever.
Hmm.
But if you can do something like that, right? Again, and that comes with being good at one thing. You just be really great at one thing as opposed to be average in 20 different things.
Yes, sir.
Because that one thing is your ticket. Okay.
Right.
And that's the
Hmm.
other thing that I have in the US. It starts at like actually when the kids are like 4 or 5. They put them in ballet and music and baseball and basketball and soccer. Oh, let him do all of it. I'm like, no, no, I was completely against that. I put my
Yeah.
son in soccer, and now he's
Hmm.
an academy player. I put my
Oh
daughter in
wow.
golf, and she played 4 years of high school golf, won the city championship 4 years in a row. I'm more like, no, no, I'm just going to pick one thing. I'm going to be really good at this as opposed to half-ass on like 10 other things.
Right.
And doesn't mean you need general, collect general information, general education. but try to be really good at one thing. So with you, like if it's going to be flipping houses, just be really good at that. Know that so well. Know, have all the tools in your toolbox, that from finance to construction to hiring people to where to buy your raw materials and all. Learn that so well, just you're like on autopilot. You don't even think
Right.
about it, right?
Absolutely, man.
But that
I
would
really
be
appreciate your time. I really appreciate what
absolutely.
you put out, and I thank you for your time.
Oh, absolutely, man. You have a great weekend, and we'll chat again, I'm sure.
Yeah, thank you, man. Have a great rest of your weekend.
All right, you too. Bye bye. All right, folks. That was cool. A young man. Is there anybody still here? Anybody want us? Come on, right there. No. All right. Let's see some positions. I have 3, so and not much is gonna change. Boom. You guys can see this? Yes, you can. Okay, cool. What did we do? What are we doing? Let's look at it. All right, this is the 2-minute chart of triple Q. We do open higher, sold off a little bit, not coming on strong at the end of the day, no problem. Positions. Ooh la la. One of my positions just took off, making me some money. Cool. I ain't selling those. Anyway, I'm long 40 AEVA technologies options, September expiration, 20 calls. That thing was 12.5 this morning. It's up to 15. Holy shit. Nice. Okay. I'm long 125 September, 15 calls on CWVX, which is actually I need to buy some more of those. So let me give me 5 more of those. 50 cents. That's the 2x ETF of CoreWeave, CRWV. So we'll put that in there. I'm long 125 of those. So this was my loser right here, folks. Right here. Right here. My cost was 480, 83, 485. Open at 3 this morning. Yeah, shit happens. You gotta take the losses. You gotta take it. So I got out. I was long 1,000 shares of HIMZ. I sold that at 15 and change, 1560 range. It's down to 1494. HIMZ's 2x ETF of HIMS. That stock is not acting well. I'm long 2,500 shares of. Look, I mean, I still have positions. I wasn't making it sound like I don't have any. I was long 2,500 shares of Pioneer Power Solutions. Cost 370. It's about 377. And I'm long 2,200 shares of SoundHound with 22 covered calls expiring today. So taking some money in. Cost is 1340. Stock is 1260. But I was short puts. I covered those puts this morning when we rallied. I don't know if I made money or lost money, but I'm going to keep the position alive. Before I think a bounce to maybe 14.5 is proper. Just trading, honestly, not much more. And yeah, that's where we are. Only 4 positions. Let's look at some charts. I'll answer questions or say goodbye. Okay, this is CWVX, which is CoreWeave's 2x ETF. I mean, I loaded up. 125 is a lot, but once in a while, you got to have conviction. This is the stock, CRWV, CoreWeave. Tested 200 EMA. Potential up to maybe resistance was like a 99 or 100. It got there. 20 EMA is about 110. 50 EMA is about 115. If we get there, those options I hold are most likely more than will double. Well, let's start with the indexes. This is daily SPY. Inside the channel, pull back to 20 EMA, rallying. Probably will make an all-time high. Upper band of the channel is about 6,600. MACD was putting a bearish divergence. It's kind of healing itself now. But I'm going to talk to you guys about what I talked at the start. So triple Qs are not even close to all-time highs because the Mag 7 is lagging. For example, Apple's on a day like today is only up like 3 points, right? NVIDIA on a day like today is only up 3 points. In the old days, this thing would have melted up, right? So again, pretty close to all-time highs. But I want to look into IWM because that's the Russell 2000. Yeah, that's having actually a 3.8% move today. See, that's the thing I'm talking about. The difference between SPY and IWM. Lower interest rates are loved by small caps. And to be honest with you guys, IWM has not even made an all-time high in all this recovery that we had since April. Okay, so if you look at IWM going back, actually, let's look at that 3 years. And we look at an SPY 3-year. Look how different those charts look, right? Look how different those charts look. You see the difference? 3 years. Look at SPY versus IWM. See the difference? Complete underperformance. But if we're going to be in a rate cutting cycle, I think IWM is going to outperform SPY by a wide margin. So I'm actually looking to do something like that. So today, for example, IWM is up 3.77%. SPY is only up 1.57%. So we're already beating the index by 2% today, right? Now, you could do an arbitrage or a hedge, kind of looking to be short SPY, long IWM. That's for pros. Let's not get into that. So SoundHound, I mean, it came down to 50 MA bounce, 1256. It should be up more, but it's kind of weak, honestly. But we'll see. On a bounce, we'll probably get our asses out of there. And AEVA, I don't know what got into AEVA. 14, oh, big ass move. Huh. Wow, that's the 2-minute chart. Hey guys, I got down to 1250 this morning. This is the Powel algorithms, folks. Let's not mess around with it. Anyway, VIX, obviously I look at quite often. Crushed. 1440. Where is VIX today? 1444. Getting crushed, right? Selling options is not everything. And that's why it's happening, TLT, I watch. Oh, TLT is having a decent move. Still, this is the 10-year, this is the 20-year inverse indicator, by the way. If TLT is going up, interest rates are going down. This is the long end. Interest rates have been going higher. Actually, this is when the Fed cut the rates right here. TLT was 101.5. Now we're down to 87. Rates have gone up. This is the dollar index. Okay, look at the dollar index today. Huge leg down, right? Since actually December last year, dollar index is down 11%, maybe 12% now. So that's how much money you lost buying power, folks, right there. If government tells you otherwise, they're full of shit. Okay, and here's gold. I mean, gold has been going sideways for how long now? A nice candle up too. Gold has been going sideways since actually April 15th. We are definitely going to trade in the group, this one. Bollinger Bands are tight. Everything is stacked. Next breakout. If rates go down, gold is going to 4,000. If they're going to cut the rates, gold is going easily to 4,000. So, figure that out. What else? We can go through some charts, but really, I mean, a lot of things like, okay, we go to Palantir, 50-point sell-off, now bouncing a little bit, but it's weak. It's anemic. It's already like 3-4 points from its high. It's only up 3 points. Nasdaq up like 2%, and Palantir is only up 2%, right? With a 3 beta, should be up 6-7%. It's not. Reddit, we traded actually the 2x ETF. It's the red now. See, this is what I'm trying to explain to you guys. This is the market. I mean, today is the euphoria day. That's why I cut positions down. I don't want to. Yeah, I just want to be careful here for a little bit. Because the market on Monday may read the rate cuts as negative, actually. Yeah, let's see. Where are we there? 1052. Yeah, we're kind of slowly bleeding on that one. Yeah, see that? This is the run. Now we're bleeding. HIMS, same thing. It's being sold. And this is HIMZ, 2x ETF. Yeah, I sold it 14. What did I sell that? I sold it on that bounce, actually. Let me see. I think I sold at 14.50 or something. I mean, 15.50, somewhere up here. Oh, yeah, right there. 15.42. That's where I sold it. Okay. SoundHound. Not a huge fan. I mean, it's struggling, but it's kind of holding. We'll see what happens. I'm looking for like 13.5, 14. I'll be out of the dodge on that one. If you have any questions, put it up. What else? Oh, I'm long PPSI. I want to actually buy a couple thousand more share of that. I like that chart. Yeah. I think we're going to revisit probably high fours. Yeah, I only have 4 positions now, so there's not much to do. Just be patient. SoFi. A lot of people look at SoFi. Yeah, new high today, $25. Okay, I was short SoFi. I made a little bit of money. Joby, I was short. I'm still want to be short. Yeah, I can't even rally. Okay. Some of the nosebleed stuff. Hood. I think Hood is retesting the high. No, not even. Yeah, this rally is not helping too many stocks. They're already like multiple points off their highs intraday. So my member group was probably puzzled, saying, "Why is this guy selling? Stock market's screaming." I'm like, "Yeah, okay, it's cool." Yeah. What else? Nvidia. Did we look at Nvidia? Yeah. I mean, I don't see much. Financial stocks should do well today. Goldman and JP Morgan. Yeah, Goldman pretty close to all-time high. JP Morgan. Lower interest rates are higher margins for banks. Yep, those are beautiful charts. So maybe financials are, what is the financials? What is it? I don't know. I don't know the ETF for financials. XLF, is it? God, I'm so good. Yeah, new high. See what I mean? That's what you guys got to look at. You got to look at the rotation. What is the hard group? Where's the cold group? MicroStrategy. I don't know. Something's going on with this thing. I mean, it's up sharply today. Thank God for some of my members. But Bitcoin being 117,000, only like down 7,000 from its all-time high, and MicroStrategy down about 30% from the all-time high. Doesn't make sense. But then hopefully nothing bad is going to happen there. ETH, well, BMNR is the new one. 53, that's the Bitmine Immersion. That's the Tom Lee Ethereum Treasury Asset Company. And Coinbase should be doing well today, probably. Yeah, up 20. Yeah, they kind of retested the low. I'm trying to trade a lot of the 2x ETFs on these ASTS. Like a lot of stocks pull back a lot, actually. Like ASTS pulled back from 61 to 41 almost. And yeah. Lemonade is one of my favorites. Yeah, reacting well. Lyft is doing well, actually. Lyft maybe. Yep, 17. There it goes. Nice move on Lyft today. Wow. Uber. Oh, getting to an all-time high. Anywhere there. Oh, NEO. Let's see where that is at. 641. Swear to God, I'm going to buy some puts on that on Monday. October's 5 puts. 25 cents. I'm going to buy like 100, 200 of these. What are the Septembers at? Are they a dime? I may buy some Septembers. What are the earnings on NEO? September's at 12 cents. 1 more month double. It's worth it. Go for October. What's the IV on those? 93%. Okay. What's the IV on the Octobers? There's a regular expiration. 87. Okay, it's better. What are the earnings on NEO? I'm not sure. Is this the earnings pump? Beautiful chart though, man. I even told them, I said, this is like a consolidation pattern breakout. I've been kind of cold lately, so I go like, I'm not going to mess with it. MACD is like turning up. It's beautiful. But the measurement on NEO is, for my members, they know about this hopefully, 330, 335 to 520. So let's say 340, 180. Put 180 on top of here. Put 180 on top of 445. What is that? 6. Is it 180? 340. Yeah, 120, 180. 180 on top of 445. 625. We're above it. 641. That shows the strength. When is the next resistance? It's just washing it through. I mean, there's resistance up here, 720, 770 levels. The problem with NEO is it had the exact same pattern here, right? Move, consolidation, breakout, and then bled all the way to nothing. I mean, granted, this was like this is coming off of a long, if you look at a long-term picture, actually, it looks quite nice. But it has these runs and then it just fucking dies. Same thing. Had these runs and it just dies. NEO was like a $70 stock at some point, I think, or $90 stock or something like that. Yeah, no, I was right. $67. Long term, I mean, if you're just a technician, it looks nice. I'm not going to deny it. But I think it's getting a little ahead of itself. Volume is good. Everything is good. Options must be going crazy on this thing. Let's look at the weeklies. God knows what kind of gamma squeeze is going on. There's also shorts. There's also many millions of shares of shorts sold. So gamma squeeze is definitely a possibility. Yep. Look at all these options trading. Next week's options. How about today's expiration? Wow. Look at that. 29,000 open interest, 67,000 traded the sixes. They went from 3 cents to 58 cents. Yeah. And 3,800 open interest on the 66.5s traded 56,000. Low of a penny, high of 16. That's 15x, folks. Penny right there. Yeah, I will definitely buy some puts on this puppy. Just for a pullback, Zaven. Don't get upset. All right, so that's what we're doing. Triple Q looks good. New all-time high probably coming up, hopefully, maybe. I don't know. One more position look. AVA. Yeah, it's holding up there. Something must be coming out on that thing. Somebody always knows. Remember that, folks. CoreWeave. Yeah, CoreWeave. Just look at that. Just bled it. 98 all the way down to 93. Yeah. Oh, well. Same thing with hopefully not sound. Yeah, 1250. I mean, stock up, when your stock is only up like 2% on a day like today, you have issues, Houston. Yeah. I definitely want to add to my PPSI though. For sure. Where do I add it? Do I buy the breakout? Yeah, I've been long this. I want to buy some more. Yeah, next leg up is going to just, for sure. We have like a dollar leg coming here. This is the 1 hour, 30-day. MACD's about to turn. I'll probably add to it today. Anyhow, folks, that's where we are. So let me go to the front, answer a couple more questions, and then say goodbye. Go have my cup of coffee. Yeah. Looks like it. I don't know what happened. Maybe there was some news or whatever. Shark Stereo. Okay. What's up? Sure hope you're DCAing, sir. Is it really? Is the IPO of $7 or 6.5? I didn't know that. Yeah. You guys are close. I think. I don't know. I think Doug is in the farm in Chicago. Anyway, all right. So I'm gonna go take off. Have a great weekend, everyone. See you guys on Monday for Trading with Sergio, Monday edition. And thank you for the gentleman that joined from UK, interrupted his dinner. Yeah. See you guys Monday.